Electronic Arts has been range bound between $150 to $120 for about the past 2 years or so. So that begs the question, are we going to go higher from here? Are we going to remain unchanged and in this trend, or are we going to proceed lower? Let's find out in this video. How's it going? Welcome to Everything Investing. I hope all is well. It's time to talk about Electronic Arts, or in other words, EA. The company has just reported their Q3 2022 results. That's what they consider it. And let's just jump right into it. We can see right away something they want to blast right out to you was that this was their largest quarter in the company's history in terms of their net bookings, which is essentially just their digital and physical products and services, their underlying profitability, and their cash generation. We'll jump into all of that in just 1 second. Before that, let's take a look at what they've done. So we see net bookings for EA Sports titles, right? This has grown 10% year to date. Diving a little deeper into that, we see that the game FIFA, which is soccer, for those of you who don't play that game, this was the number one highest selling title in the Western world during the fiscal year for 2021. Then they also had a secondary game that was doing very well. This is Madden, so this is NFL. This is football as it's referred to in the Western world. This was the number one highest selling sports title in the holiday period, so this most recent quarter. And also it was the third highest overall for the year of 2021. Okay, scrolling down just a little bit, the next thing they wanted to show us is really something that's remarkable. They have 540 million unique active accounts since this past year. That is 500 million users that they currently have playing their game actively. And that's extremely impressive. That's like 15 times the size of, some countries, like Canada, for example. All right. More than 180 million monthly active accounts. This is really strong user numbers, and it really is the reason why they've had their largest quarter in their history. So let's jump into their financial summary here. So we can see the guidance was poised at about 1.7 billion in terms of revenue. They actually beat that. They came in at almost 1.8. Their operating expenses were supposed to be at 1.1. They did just come in shy of that, so that's even better. They did beat that. And their GAAP earnings per share, this was supposed to be at 2 cents. They came in at 23, so they really just beat guidance estimates. So before we proceed any further, let's quickly take a look at their technical setups. This is something we're going to discuss later on in the video. We're going to do a deep dive into this. We'll also take a look at the valuation for EA, and we'll see if this is something we as retail investors will want to add to our portfolios or if we can find better. But just before that, I just wanted to quickly show you that this is very interesting from a technical point of view. It's setting up nicely in this trend here. As we can see, we've had some nice channeling going on here, and it's setting up for a trade. So stick to the end to see if we will be pulling the trigger. But back to the financials. So starting with their revenues, we see that they came in at about $1.8 billion in revenues. This is up from a year ago in the 2020 holiday quarter, where they came in at $1.67 billion. Okay, so this is slightly higher than that time period 1 year ago. And if we look at this from a 9 months perspective for the year of 2021, yeah, they came in at 5.1 billion versus the 4.2 billion from the year prior. Now that's pretty strong growth year over year. If we look at their cost of revenues, we can see this is relatively unchanged, but it has slightly ticked up. And this is what you can expect when you see the revenues are growing, their costs are also going to grow, right? So we see that it's not much difference, but it is a difference in their gross profit. It has increased. This is a good sign. Okay, we see that they've had some research and development. This has also increased year over year. Their marketing and sales, it has as well. Same with their G&A. And then we come down here, we see that their amortization has kind of exploded from this 5 million to $661 million level, but that's the result. And it comes up with their total operating expenses that come in at $1 billion versus 820 million 1 year ago. So again, for the quarter, we can see their revenues did grow, but so did their expenses. And this is the reason for their decline in operating income. This came in at 100 million versus the 250 million 1 year ago. So it's not the greatest sign, but you have to take this with the greatest salt, because we have to remember that during this 2020 period, this is when everybody was on lockdown, everybody was at home, so everybody was playing video games at this point. So of course their revenues are going to be higher at this point now versus now that everybody is returning to the office and whatnot. They don't have the same amount of time as they did previously to be playing video games. And again, if we look over here at their 9 months ended results, yeah, this is also down. And like I said, you have to take it with a grain of salt. So we get over, we pay some taxes, and we're at our net income figure here of 66 million, again, down from the 211 million 1 year ago. Moving on. So we get over now to our balance sheet. Okay, this is where we're going to see some interesting things. Okay, so right off the bat, we'll see the cash and cash equivalents. This is down about $3 billion from 5.2 billion to 2.6 billion dollars worth in cash sitting on the side for them to use. Why is that? Well, let's get to that in just 1 second. Before that, we'll also see that the short-term investments are down from 1 billion to 346 million. Again, this has decreased as well. And if you didn't know, the current asset section is listed from most to least liquid, right? So these are the top items that will be the most liquid. You can turn them into cash and use them for whatever you want the easiest. So that's why you'll see these items here have fluctuated significantly. So that leaves us with 4.3 billion dollars worth of total current assets, which is down from the 7.2 billion dollars worth that they started the year with. Okay, we come down, we see that they have some PPE, and this is what you want to really look at. Okay, so this is what I wanted to get at earlier when I touched on the cash equivalents, why this has decreased. So the first thing you see when cash has decreased, I'm thinking either this is going to be some form of impairment or this is going to be some form of acquisition. And the one way you can tell is right here. You look at the goodwill. This has increased from the start of the year at 2.8 billion to now 5.3 billion. What does that mean? Goodwill really is just a measure of the acquisitions and the overall assets that the business can claim. So they're saying that based on the acquisitions now, it's worth $5.3 billion. And then again, right here, you see the acquisitions related to intangibles. This is at 1 billion. So this is up as well. So what does this mean? This clearly indicates to me that there's been some acquisitions over the past 9 months or so. So that leads us to about $14 billion worth in total assets. Okay, so now let's take a look at the liabilities. If you look at the liabilities, there's not much going on here in the current liabilities section. It's pretty standard from what you would see typically, but they have about $3.6 billion worth there. And then this is really what you want to look at always is the debt. Okay, so we see senior notes here. They have about 1.8 billion, 1.9 billion dollars in debt. This is really this is what you want to see. This is super insignificant considering they have 4.3 billion dollars just sitting there in total current assets. In cash alone, they have about 2.6 billion. This could pay off the debt right now if they wanted to. So the debt is insignificant. They have total liabilities of 6.3 billion. Again, compare this to their total assets, 13, and their total current assets, 4 billion. I mean, they can easily pay this off. This is a check mark. This is what you want to see. And so this leaves us to stockholders' equity at about 7.6 billion, which is down just slightly from the 7.8 at the start of the year. So now let's get into the statement of cash flows. Okay, so we start off again. This is the 3 months ended for this quarter. We have starting with $66 million worth in net income. Again, we know why this is down year over year, despite having their largest quarter in history. We know why this is. And just for simplicity's sake, I'm actually going to look at the 9 months ended. So this is basically since the start of the year until now. And we'll look at these figures just because they'll be a little larger and they're going to be a little more accurate when we think about this in terms of a yearly perspective. So let's start with this. So we have $564 million worth in net income. Again, we know why this is down. We don't have to keep explaining it. Okay, we add back in some depreciation, so 345 million comes back into their business. Stock-based compensation, I don't personally add this back in, but for the sake of this video, we will add this back in for now. And we get to about $1.4 billion in cash from operations, okay? We pay for some CapEx, and we're about $1.3, $1.4 billion worth of free cash flows. Okay, this is what we want. This is key when it comes to the valuation. They have $1.4 billion worth or $1.3 billion worth of free cash flows to the business to do with what they want, to reward shareholders, to do whatever they want to. So let's see what exactly they really do with those cash flows. Okay, and again, we do see here that they did make the acquisition. They spent $3.4 billion to acquire another business, adding to their asset base. But let's see what they do with the remaining free cash flow. So they issued a little bit of stock. They paid some dividends. This is an insignificant number on the $1.3 billion worth of free cash flows that they have. And then they also had to pay some taxes, and they got down to this. So this number here, they've paid about $1 billion to repurchase stock. This is going to push the stock higher. And ultimately, they're trying to reward shareholders, primarily not with the dividend, but rather by repurchasing their own shares of the company so that the price ultimately increases. So that's something to know. Let's do a quick calculation here and see what are we paying if we wanted to buy EA today. Okay, so if we take a look at the stock price here, we can see, if we come down here, we see they have a market cap of $37.5 billion. So we put that into our calculator, 37.5 divided by the 1 point, we'll boost it a little bit, we'll give them $1.5 billion worth of free cash flows. That's a price to free cash flow rating of about 25. So you're paying 25 times cash flows for this business. That is too rich for me. That's too richly evaluated, especially when they're going through the largest quarter in history. Typically, you would want to get this as close to price to free cash flow ratio of about 10. So at this point, seeing as we've just been at the highest quarter ever, I don't see EA as a great investment. Maybe down here at these levels, this would have been a great investment. Because the market cap would have been significantly reduced at this point. We probably were looking at price to free cash flows of 15 or so. That's a much better investment at that point in time versus now where we're sitting at relative all-time highs, which we seem to be stuck at for the moment. So moving on to our technical analysis here, we can see again, the stock has had troubles above this $140 to $150 range. It has never been higher than that. But due to their strong recent performances, especially due to COVID and whatnot, they've had some good buying pressure as well, pushing the stock back up into these levels. So that's why we're kind of range bound over the past 2 years. But looking at this from a trading perspective, this is also setting up for some nice buying opportunities right at this point in time, because if we see here, we've pushed up into this $140 price range again, and they've pushed the stock right back down into our buying level. So if we look at the option chain, looking at about 1-2 months out, yeah, you could sell some great premium down in this 120 range, because the last time it was here was back in 2020. It's been a while since it's been there, and frankly, I don't see it going that low, especially when they're having a great quarter at the moment. And they are guiding for this trend to continue further. So right now I see this as a great buying opportunity if you like options. You can purchase some call options, or if you want to sell some options, you could sell some premium down here in this 120s level. That would also be a great trade. But for right now, I wouldn't be doing much else with EA at this point in time. I'd want to see how this earnings release plays out over the next quarter or so. And then once a direction is chosen, we can follow the trend and make some money on the way up. So with that being said, that's the end of this video. Thank you for watching. If you watched to this point, I appreciate it. Please like and subscribe if you enjoyed this content, and I'll see you on the next one.